You ever try to find a good stock and you feel like it's on our date and there's a bunch of red flags out there and way too many options? Well, today we're going to help you with that. We're going to walk through screeners, in particular FinViz. It's one we talk about a lot on here. And Corey, the master trader, is going to show us how he finds some of those great trades. Now, Corey's got on his hoodie, his black hacker hoodie, ready to go. How you doing, Corey? You on mute, Corey?
I'm good. I'm honoring Jim because the black hoodie energy on Sunday. So I'm honoring my brother who's traveling.
Should I do the same? I don't think it's gonna work though. I got my cord on. What up, Go PNG? Good morning to everybody that's coming in. All right, we'll get set up. We got a quick presentation for y'all, and then we'll go through this real quick. And then later on today, we'll be behind the village talking about our plays of the week. And so if you're not in the village yet, make sure you're going to the village. Make sure you're going over to blackwealthrebels.com. Blackwealthrebels.
If y'all was in the village this week, y'all heard me snapping and spazzing out.
What did you snap and spazz out on, Corey?
Y'all heard me snapping and spazzing on letting our heroes be less than
less than
what they really were, man.
Yep. That is a fact. That is a fact.
Yeah, man. People will whitewash you here today.
Real quick. Morning, Carlos. Morning. So I'm just going to give it like another minute and let everybody come in, and then we will get it popping. What you got over there, Corey T?
Yeah, man.
You keep trying to put them on
Yeah,
mute.
man.
The dogs are driving you crazy.
Yeah, man. My cousin got like 12 dogs. Like he got a gang of these Jones, and so they all during the 10 of them could be quiet, and then it just take one to get busy, and then the rest of them just start going crazy.
That's how it go, man. That's how it go. I'm raising a young puppy myself, and oh boy, I don't know if I'm going to make
it. Yeah, that puppy don't got as many siblings as the ones here, so I can guarantee you, damn that.
What up, Joe? What up, Jamal? All right, so let's get busy, y'all. All right, so how to use stock screeners, right? As you heard me say earlier on, or actually I forgot to mention, there are about 4,300 stocks on publicly traded as of in 2024. Let me back up. In 2024, there were over 4,300 publicly traded companies on the stock listings here in the U.S. Now, if you go worldwide, it's like almost double that, if not more. But a lot of people always say, well, how do you figure out what's a good one? How do you figure out what's a bad one? When I say good or bad, talking about an investment. So today, we're going to go through that. Y'all should probably take some notes and pay attention to this today, y'all. So we're going to talk about a tool called FinViz that we use a lot, all right? What is a stock screener? I love stock screeners. I actually nerd out on stock screeners. Me and Corey were talking about stock screeners before we went live. He said he has all kinds of stock screeners. And I thought I was the only one that nerds out on these. And my love for these goes back to when I was trading professionally. I had a Bloomberg terminal. And if any of y'all know what that is, it's like a high-powered super producer program that's out of this world. Now, at the time when I was doing this, wasn't really nothing else like this in the market. But now we have things like TradingView, what you hear us talking about, what you can do a screener on, FinViz, Morningstar, Yahoo. There's all kinds of screeners out there. But again, today we're going to talk about FinViz. So what can you do? You can use a tool like FinViz to sort, filter, and screen through all the stocks. You create a criteria, you create a filter, and then you go hunting and searching for these things, right? So I'm just going to go through some of these FinViz is just a company that we use. Corey Austin says he used the free version. I know I use the free version. I've used the paid version in the past, but you get so much from the free version. A lot of times you don't need to use the paid version. What you got, Corey?
Yeah, no paid version for this, because the free version is so dope. If you pay for it, like that's you looking for Bloomberg terminal kind of stuff. Like this is a beginners. For beginners, no paid version.
Yeah, you don't need it. You don't need it. All right, so these are just a couple of things you got to think about when running through a filter or a screener. All right, you want to describe it. You want to look and see if you want to trade stocks, U.S. stocks, international stocks, large cap, mid cap, small cap, what kind of PE ratio these are. If you don't know any of these terms, please look them up so you can understand what you're screening for. All right. Now we're going to do an example real quick. We're just going to run through it. All right. But these are some of the things you can screen for. Like I said, mid cap, price trends, debt to equity. If you want to find companies that don't have a whole lot of debt or have a lot of debt, because there's strategies for that too. You can do all that here. You can look at different sectors by dividend yields, all kind of things.
Jigga's question in the comments, yes, you can, sort of. They do have settings for that, yes.
Now, a lot of the things, though, you may have to get paid to do some of the real super duper tricked out stuff. But yes, there is a setting for that. There is a setting for that. So again, looking at customized alerts, right? Volume indicators, a lot of things, crossovers and things like that, you will see. Price action, I'm jumbling my words, y'all. Price alerts and all of that are things you can do as well. And I see Dr. Chaz is in the building. Shout out to her. All right, so some of the things I see when I use it, because again, I geek out over it. You know, you can figure out what your best practices are. You can combine analysis, because people always ask, what's better, fundamental or technical? I actually like to use both. And you can use both with FinViz. Or you can use one or the other. It doesn't matter. All right. Now, I wanted to do a quick screen just so I can just show y'all this. All right. Give me 1 second. So I want to do a quick screen. And this is what I want y'all to do. Follow along and do this. Because the more you do this, the better you'll get. So I really want y'all to get super duper familiar with this tool. So we're just going to sort for companies that have a 3% yield, 3% plus yield, 60% max payout, and max payout is talking about dividends. All right. And a debt ceiling of 1% or 1. And then we're looking at ROE, which is return on equity. That is 10%. All right, so I'm going to shift screens real quick and show y'all what I have. Now that's super duper small. I can't barely see that. Let me see. Can you see that, Core? All right, I think that's a little bit better. All right, so right now it's filtered through 9,933 companies, right? We don't want that many. So first thing I'm going to do is I only want to look for U.S. companies. So I'm looking at U.S. companies. All right. I'm also going to look at mid-cap or more. Wait a minute, that's not right. 2 billion or over. 2 billion market cap.
Actually, yes, that's right.
I had it right. Well, it's so limited. It was what I had originally.
You had it right the first time.
Well, I had 2 billion to 10. I want to do just over 2 because then it limits it. All right. So now you see as it's going through, we're down to 1,548 companies that we can select from. All right. And we haven't even gone through it yet. So then when I go through and look at over 3% dividend yield, it goes down to 343. And you can see this little arrow over here on the left-hand side. And yes, Stacy, there's a playback. You can always watch the playback on the Black Wolf Rebels YouTube channel for these. Our plays will be behind the wall. So you have to go on over to blackwolfrebels.com. All right. Now, what was the other, David? I don't forgot the the other filter I was supposed to sort for. I know it was 3% dividend. There was ROE. Oh, I know what it was. Debt to equity.
Click to the fundamentals and return on equity.
Yep. So we want to do under one, and then I believe there was one more. But either way, right now we have 100.
Return on equity right above it. Right above it. Return on equity.
Oh, I did that.
No, you did debt equity.
No, you're right. You're right. And that was 10% over 10%. There we go. So now we went from 154, now we're down to 56. And so some of the companies we're getting, Alliance Bearstein, American Eagle, American Financial Group. All right, let's see. Chevron, everybody probably knows Chevron's, Conoco. There's a lot of popular ones on here. So again, this is not investment advice, y'all. This is just showing you how to use a simple tool. All right. And this is a tool that we use all the time. So again, this is not investment advice. We're not telling you to go invest in any of the companies that came up in the screen. You must do your analysis. All right. You must make sure it fits your overall criteria. Make sure you have a criteria, though, for the things you're looking to invest in, why you're going to invest, and how long you're going to invest. All right. So keep that in mind, y'all. Keep that in mind. So again, Merck, Johnson & Johnson, National Beverage Company. And let's see the third one in here. And then once we do that.
Capital was in there.
Oh, I didn't see Main Street. I must have skipped over it. Then you got Public Storage. T. Rowe Price, yep.
Valero.
Yep. Exxon. You know, if you go look at Exxon is a major holding, XLE, which is the major energy ETF. So, you know, you'll find a whole gambit of these things. All right. So going back to this. So we're going to bring up the master trader himself. But when you're using this, just keep this in mind. Save y'all filters. Refine your filters, all right? And review them and monitor them regularly. Because if you're serious about this is only for people that are serious. If you only want to do this once a year, every other month, it's probably not for you. But if there's something you want to do and you want to rock on, you want to save these filters and you want to go back and look at them often. All right, so Corey's now going to take over, run the show. And if y'all have noticed, Corey has always come in with some fire, plays. So this is one of the ways he does it. So take it away, Corey.
Yep. So basically, I'm going to share mine. So when I go to my
hold on, one question real quick, Corey. I meant to ask y'all, when y'all went to the screen, what are some of the companies that y'all found? Did y'all see these companies that I was talking about? Throw that in the chat and let us know. Go ahead, Corey.
All right, so I have different screeners for different things, right? So when I'm screening something for potential stock to buy into, I'm looking for something different than when I'm looking for something to trade, right? So when I'm looking for a trade, I'm gonna start with what I'm looking for when I'm doing trade, since you just did something for investing, right? So what I'm looking for me is I'm looking for macro caps. I'm not looking for I'm looking for mega caps, right? So that already automatically takes me down to 55, right? I'm trying to narrow the field, right? I'm looking for volume over 2 million.
Now, why mega cap score?
Narrowed me down to 47. Has to be because if these companies, mega caps are the most likely companies to bounce back from any kind of turbulence or turmoil.
Okay.
So if I catch a mega cap in a bad situation, throw a dart at it and just give it enough time and basically let it bounce back, right? Optionable. You want to make sure it's optionable, right? That you can run options on it. We still at 47, right? That's my descriptive, right? If you look right here where it says descriptive, you see a 3 right there, right?
Now, Core, try
So
to
that lets you know.
try to blow up your screen a little bit. Oh, there you are. Yeah, there we go.
All right. So now, fundamentally, I'm not going to look for anything there because fundamentally these companies are already over 2 billion, 200 billion. So I don't need to, because I'm trading them. I'm not really trying to own them. Now I'm going to go to the technicals, right? And this is why I was telling Jigga that you can set it up to look for all kinds of stuff in the technical section, right? So if you go over here where it says pattern, you can set up what pattern you wanted to look for in the market, right? So if you got a pattern, right, whatever pattern that you're used to looking for, you can set it up. You can set up your FinViz to look for that pattern for you. It's making me bounce out of here. But so for me, what I like to look for is anything near the 52-week low, right? Something that's like 50% more below their 52-week high, right? Nothing, which means nothing is fell off a cliff. So then I would just keep moving that up.
Tesla.
Right? Nothing fell off a cliff. So we just keep moving it up. Tesla. So Tesla is the only thing that's at least 40% off of his 52-week high. If you believe Tesla is a good company, now would be the time to get back into Tesla, right? This is simple. Like I'm not even looking at anything crazy. I'm just looking at companies that might have fell off, right? So if it's over 40% away from its high, there's 2 things that could be going on. One, it could still be falling, right? And you don't want to catch the falling knife. So you want to go do your due diligence and make sure that it's not falling off a cliff, right? And then 2, if it's reached an area where on your charts you see that that you feel comfortable getting into it, then this is a great time to get into it. Right? What Jamil was asking about RSI. You can check you can check for specific RSIs right here. It says right here RSI. So you can check for specific RSIs right here, Jamil, if you're looking for it, and you just pull it up, and you can look for specific RSIs right here.
I know one thing I love to do. I love to go dumpster diving. I love to go dumpster diving, just like kind of Corey's doing, right?
Yeah, so that is a dumpster dive. That's why I looked at the.
Go ahead, Corey.
Yeah, so basically, what you would do is, for me, I could just move through these, right, and say, all right, what's 20% or below their 52-week high, and then just keep moving it down until I find something else, right? But I'm just going to go to any, right? Take it back to any, and then refresh. My screen is, I don't know, all the ads. FinViz be acting super slow sometime on my computer, so don't mind me, right? So now, if you wanted to look for certain candlestick patterns, right? You can find Jeez Louise. All right, you can find your favorite candlestick pattern. If I could get it to stay on the screen, you can find your favorite candlestick pattern though, and do it. Right? For me, I like stuff with some ATR, so I would put ATR over 3, right? Because I like some volatility. So you got big companies with some volatility, and you got 32 companies right here, right? And then you can do your dumpster dive, and these are all your top hitters, as you can see. Apple, AbbVie, and these are giant companies, national and international, right? So the market's been on the tear, right? So most companies aren't anywhere near the dumpster. Jeez, please. I wish my screen would stop freezing so that I could really show y'all what's going on. The ads is trying to take over. So yeah, so like if I wanted to do some to see where things are compared to their 20-day moving average, something below the 20, anything priced below the 20, below the these right here have a price below the 20-day moving average. So this is where I would probably begin. And 50. Jeez.
Don't worry about it, Core. You got that Gateway 2000.
But this is where I would probably go. So yeah, beat it. So you would just go price below the 50, right? So if it's below the 20 and the 50, you have 14. You have 14 companies, and this is where I would start. All right. And then, like I said, with the Tesla, they already told us that Tesla is already 40% below its
52-week high.
Ad loading. As you can see, the ads is going crazy on here. So maybe you might want to get the paid version so the ads don't
or you can get an ad, or you can get an ad blocker. So one of the things I do, Core, is I got an ad blocker. I don't get anywhere as many as you get, but I don't have paid.
Yeah, I got to do something because this is ridiculous. But yeah, so I would start here, and like I said, you know, when I'm looking to trade, this is the list that I will go off of. And then, like I said, these are below the 20 and the 50. And then I already did my check for 52-week high and low, right? So then I would go on FinViz. I mean, not on FinViz, on what's the other joint that
TradingView.
talking about?
TradingView.
TradingView. I would go on TradingView or whatever other service you use, and then I would check my charts. So that's what I would do for trading.
What up, Jabbar?
So yeah, so we so that's easy. That's easy work, right? If you're looking for a trade, right? I don't be like a lot of people scan the whole market and do all kinds of. I'm not looking to trade small companies. I'm not looking to trade companies that are doing X, Y, and Z. You can look for trading cycles and all that. Like I just narrowed my field down to 14 companies. And 14 companies that I know that can and will bounce back. And by looking at the price change, have started to bounce back. Some more than others. So at this point, it's kind of like shooting fish in a barrel. I could probably just pick any one of these companies, run a call, stick it out 60 to 90 days, and probably make some money off of it. I don't even got to think about it too much. Like I'm not trying to be like super trader and make 5 million% per trade and all that. I'm not trying to do all that. And I'm not really trying to look hard for trades. Like I'm gonna come here, use a simple screener, see that these good companies is falling on hard times, and then I'm gonna make me some easy trades, and then I'm just gonna sit and watch my money pile up. I'm gonna take my 20-30% and run. I'm not gonna think about it too much. Right? So that's the strategy that I use for finding trades. Like other people have great strategies. They probably make 20 times as much money as I do. I don't care. None of that means anything to me. Because I have to do what fits my lifestyle and my trading style, right? So I'm trying to find easy trades. I'm trying to find good companies that's going to bounce back, that's falling on a little bit of tough times, and then ride them right back into the good times.
Makes sense.
Yeah, I'm not trying to fight with the market. These are companies that the market identified as good companies. They got over $200 billion. They make money, and then right now they're off their normal averages. So why am I fighting?
I mean, the market is like the house. So never fight the house. You're going to lose. Never fight the market. You're going to lose.
Yeah. I'm not putting no hands on the market. The market, you know what I mean? I'm just going to take what's fairly mine. I'm just going to take very simple things like this, and I'm going to go take a look on my charts, and then I'm going to pick one of these companies and run with it. I'm just telling you. So it ain't nothing but to do it, That's it, right? Like if I move this ATR, this average true range, like I only picked the average true range over 3 because I wanted to have some movement, and I don't want to wait 6 months for my money if I don't have to.
Break that down a little bit more, Core.
So average true range is the dollar amount that the stock moves per day, up or down, right? So you want to make sure that it does have some range, right? So we can look at the volume, like so on for Accenture, the ATR is over 3, so the range is probably from 345 to 351, right? So that's every day I can look for a $3 to $6 move on Accenture, and I can do the same with all of those. And the lower the stock price, that $3 move means more, right? So a $3 move on Google will pay me more than a $3 move on Accenture. because Google's stock price is lower. So the percentage that of that $3 move is much higher. It's almost double. So where if on a $3 move on Accenture, I might make 10%. On a $3 move on Google, I will make 20% because the price is half. So I would be looking at something like Nvidia or Google, or like those would be the ones that I would try to pick first. Broadcom, I would try to pick those first, right? Because if you get a $3 move on one of them, you're getting way more for your money than you would be getting on a stock double the price. But now that doesn't tell you about their full move. You would need to go to each company and look at their ATR, right? Because I know UNH got an ATR like 15, right? And so I know you can make a gang of money every day on UNH if you decided to get involved with them on a daily basis. Even though their stock price is almost $500, you can make a great amount of money on them because their ATR is very, very high.
Now, Corey, let's take a couple questions real quick. So okay. Jigga's asked him, how far out do you go on contracts? 14, 30, or 60 days? I mean, you talked about this before, but
I try to put 30 to 90 days on every one of my contracts. Minimum 30 days. Because of time decay, right? Especially on options trading. On options trading, there's a thing called time decay, right? So I can be right, but if I'm not right away, then time decay starts to come in, right? So if I give myself 90 days, right, and first couple of days it goes sideways, I don't start to lose as much money right away, right? But if I got a time decay of days or 10 days or a week, and it goes sideways for 4 of those 7 days, I'm gonna lose most of the money on my contract, on my options contract, because it's something called theta. It's called theta decay. But we ain't talking about theta today. We just talking about, But theta decay is a real thing in options trading, and so I give myself time.
All right.
So for those people who are scalpers, they use the theta decay to their advantage, because that means when the options contract goes crazy on that same day, they get paid a lot more. So that's where you see those big bonuses and big percentages come in, because the same way the theta works against you, it works with you. If it goes the way you want it to go right away, you make those 500,000% trades. I'm not going to make many of those. I'm just going to keep it a thou wow with y'all. I'm not going to make a lot of 100%, 500%, 1,000%, please. That's just not something I'm going to do unless, like for me, I trade futures. So I'll get those there. But in the market, I'm going to give it 60 to 90 days, because the thing about futures is they don't have no theta decay. So that's the difference between the market and futures. Futures don't have any theta decay. So I'll do, whoa, slow down, Gogi.
Corey's over there trading and dealing with a whole herd of doggies. So that I missed some of the filters Corey gave us. I know there was 50% or more from the new high or the new low. I also know average to range was 3. I also know he said, I can't see that, Core. It's too small. My glass is not on, bro. I know we're doing mega caps, just to review. I know it's all optionable options. Any.
I'm gonna go back to the beginning. Go back to the beginning. Hold on.
My man.
All right. So for my descriptive for my descriptive, all right, there we go. I'm looking for mega caps with over 2 million in volume, and make sure that you can trade options on them. All right, so
Okay.
make sure it's optionable.
So that's 3 filters right there, y'all.
Those are the 3. Those for the descriptive one. And then for the technical one, I'm looking for something below the 20, below the 50, average true range over 3. Now, but if you really, like I said, if you really want to do the dumpster dive, right, you just start with the 52-week high and low and just keep moving the lever up and down, until you find, stocks that really been taking a beating over, a short period of time. If they've been taking a beating and they near their, the 52-week high, like if they far away from the 52-week high and you think that company is a good company and it's going to get back to its 52-week high at any point, if it's 40% away from its 52-week high and you think it's going to get back there, that means you got a trade that got 40% in it. You see what I'm saying? Like that trade automatically has 40% upside for you.
Potential.
Because if you think if it's 40% below its 52-week high and you think it's going to get back there, then that trade automatically has 40% potential in it for you. You don't even have to think about it. Right? So that's a very, very simple that's a very, very simple way to get, get good trades. Like I think Tesla is a trash company, so I wouldn't. But trading it, I wouldn't have a problem taking that 40%. I can tell you that.
Now, Core, real quick, going back.
So I saw Tesla. I'm sorry. Go ahead.
You said below the 20 and below the 50. So are we talking about the 20 moving day average, or are we talking about the 20-day high low?
Yeah, so that's easy money for me. Tesla's 40% below its 52-week high. If you think Tesla's ever going to get back to its 52-week high, then I would stretch out a Tesla trade and then let it go back to its 52-week high. Right? Nothing crazy. Look at a chart. I didn't look at any chart. I just saw that Tesla was 40% under its 52-week high. If you can judge Tesla to be a good company and you think that it's going to go back to where it was, that's an easy trade. No thought pattern, no thought process needed. Now, if you like me, I'm skeptical of Mr. Musk, and he stay in the news. You got to be really, really careful about somebody who stay in the news as much as he does.
You mean
so I'm not saying it's an easy trade. I'm just saying you got to be very, very careful with it. I'm not saying I'm getting involved in it. I'm saying if I thought Tesla was a good company, I would do it. I am in the minority to think Tesla is basically Tesla is a shell company for something else because they don't do anything. They make like 100,000 cars a year. Like every other major auto producer outsells them. Tesla's a church. They are an energy company. They are not a car company. I don't know why people they do everything but sell cars. Tesla is like McDonald's, a real estate company that sells hamburgers. They're not. McDonald's make most of their money in real estate. They don't even make their money from the burgers and stuff. So Tesla and McDonald's are very similar to me. So again, that's another thing that you could look at. But that's my spiel on that. So yeah, I'm done with the screeners because you already gave them a screener to look for what's the name, and now they got one to look for trades. So
Gotcha.
I showed them a what's the name screener. Mine is way different than yours, but
well, that was just
my trading view acts silly, like fighting with it to death.
Gotcha. Well, all right, y'all. I hope you all appreciated today's Money Church, Finance Church, Stock Church, and got some value out of this. If you did, do us a favor. Leave us a like, share this with somebody who's interested in investing, and subscribe to the Black Wealth Rebels channel.
Yeah. It's easy money.
Right. And don't forget, if you want to get more in depth with us, come on over to the village, which is blackwealthrebels.com. Again, blackwealthrebels.com. Until Wednesday, we'll see y'all. But we'll be behind the wall with our plays of the week, probably in about an hour, maybe 2 hours. Me and Corey got to figure that out. But just turn your alerts on. Come on over to the village, and we'll get busy a little bit later. Later, y'all.